The U.S. has a credit card with a $14 trillion balance. Every day we pay $47 million to China alone, just to pay the interest we owe them, and they only represent 12% of our total debt. Just like when you make the minimum payment on your own credit card. Wouldn't it be nice if you could print money to make your own credit card payments? That's what the U.S. government does. But unfortunately, every time they print more money, your dollars become less valuable. And that's why the US dollar is destined to fail. Within a decade, a loaf of wheat bread may cost $23 in a grocery store. A 32-ounce package of sugar might run $62. A 64-ounce container of Minute Maid orange juice, meanwhile, could set you back $45.71. In 5 to 10 years, when each of your dollars is worth 10 cents, what are you going to do? You need to plan ahead, and if you do, you could become extremely wealthy, with real wealth. If you found an Egyptian tomb from over 5,000 years ago, what would you find in it? Millions of dollars in cash with a pharaoh's face on it? Or millions in gold? Gold was considered divine and had great significance to pharaohs over 5,000 years ago. Egyptians are deemed one of the most advanced civilizations to ever walk the earth. If you found an Egyptian tomb today, it would be filled with gold, not paper money. Gold has worked as a reliable monetary system, all the way from ancient Egypt to Rome and even up to 1971 in the United States. In ancient Rome, an ounce of gold would buy you a suit of armor. In 1900, it would buy you a gentleman's suit. Not much has changed over thousands of years. When something holds good for 2,000 years, I do not believe it can be so because of prejudice or mistaken theory. Bernard M. Baruch, American financier and statesman, 1870 to 1965. Today, an ounce of gold will still buy a fine designer suit. Depending on the designer, you may be able to buy up to 3. An ounce of gold in 1900 represented 20 US dollars. In 1900, 20 US dollars would buy you roughly 200 loaves of bread. Today, 20 US dollars would only buy you 6 loaves of bread. Today, 1 ounce of gold would buy you 575 loaves of bread. Today, a $20 gold piece from 1900 could cost as much as $3,300 depending on the quality of the coin. Up until 1971, all US dollars printed were required to be backed by gold in federal vaults. In 1971, President Nixon abandoned the gold standard, giving the government the ability to effectively print the money at will. Since then, US debt has gone from $414 billion to $14 trillion, a 3,381% increase. During that time, the US dollar has lost 97% of its value. US dollars have value only to the extent that they are strictly limited in supply, but the US government has a technology called a printing press, or today its electronic equivalent, that allows it to produce as many US dollars as it wishes, essentially at no cost. Ben Bernanke, November 2002, Federal Reserve Chairman. If you put $10,000 into gold in 2002, it would be worth $63,000 today. That's over 600% return on investment. In 2009, for the first time in over 30 years, central banks all over the world began to purchase gold for their holdings. They see the writing on the wall. Central bank gold holdings expand at fastest pace since 1964. Bloomberg. More central banks buy gold from IMF. India was the first central bank to make a major gold purchase and ended up buying over 200 metric tons of gold from the International Monetary Fund, IMF, in 2009. Many analysts believe that China will increase its official gold reserves to equal those of the US by more than 700% from 1,054 tons to 8,133 tons. In recent years, the Chinese government significantly relaxed the rules for precious metals buying for its citizens. The explicit urging by the government itself for people to load up on bullion clearly implies the expectation of a strong future for precious metal. With a population greater than 20% of the world's total and an abundance of savings, this could easily become a self-fulfilling prophecy, especially given the tiny size of the precious metals market relative to many other commodities. Some of the largest institutions in the world are buying gold and include Goldman Sachs, JP Morgan, and Morgan Stanley. Some of the largest investors in the world are putting billions of dollars into gold, and this is to include George Soros, John Paulson, Thomas Kaplan, Jim Rogers, David Einhorn, and Seth Klarman. The price of gold could hit $2,400 based on monetary expansion and as high as $4,000 per ounce based on projected overshoot. David Einhorn, billionaire hedge fund manager. Since the year 2000, gold has outperformed the Dow Jones, S&P 500, NASDAQ, bonds, mutual funds, real estate, and virtually every paper asset from currencies to subprime mortgage bonds. Gold is one of the only assets that cannot be created. It has to be mined and pulled out of the earth through a natural process. All of the gold ever mined throughout history, if refined to 0.9999 purity, would only be enough to fit 2 Olympic-sized swimming pools. So the real question is, when it all falls apart and your paper dollars become virtually worthless, will you be ready? Will you own gold? Quickly go to goldandsilverpricestoday.org. Simply add your information to grab a special kit on how to protect yourself from economic collapse. Oh, by the way, please make sure your phone number is correct, because Regal Assets will call for your physical address and include a signed copy of Aftershock. I'm sure that will blow your mind. goldandsilverpricestoday.org. To your success!